All right, for Sean and for everyone, there were a couple of tools I forgot in our discussion about comparing different trades. It happens from time to time. We just want to cover the concept, we want to cover the ideas, and there's a lot of tools that are available for you. But let's walk through some of the tools that you can use to compare positions one stock at a time based on Sean's initial question. The first one is the search summary tool. Sean's initial question was, if I find a covered call opportunity using the picks of the day, monthly or weekly, does that mean that it would still be a good candidate for bullish positions in spreads, leverage positions, buying options, and so forth? In that previous video you saw, we walked through the different criteria. The search summary tool is a great way to evaluate if there are other strategies that are neutral or bullish, neutral or bearish, or just neutral, one stock at a time. That's the search summary tool. To access a search summary tool, on the top of your page, simply enter your stock symbol into the symbol lookup and click on search summary to compare different trades. You will pull up different ideas for covered calls, cash secured naked puts, calendar call spreads, bull put credit spreads. As you can see, you can compare the return, the probability, and more on these different strategies. Now, it's not just for bullish, neutral to bullish, bearish, neutral to bearish, or neutral, or all. You can configure the search summary tool any way you want to. You can just select bullish, you can just select bearish, or you can just select neutral. Or you can click the clear all button to empty all strategies out and then customize what you want to see. If you just want to see bullish strategies, Sean ran a weekly covered call or monthly covered call picks of the day search, saw a couple of stocks he wanted or was interested in, but wanted to do bullish strategies matching that sentiment for bull put credits, bull call debits, collar spreads, maybe calendar calls, maybe just buying calls, long call positions. Just select bullish after hitting clear all. You run a bear call credit spread, you see a stock that you're interested in, but hey, maybe you want to see other options. What about the bear put debit spread? What about longer term, maybe calendar put spreads? What about a married call? What about a short caller? If you want to take that route, well, just click select bearish, and then you'll see the available trades for your expiration time frame that's selected. And of course, hit clear all and go to neutral. Iron condors, iron butterflies, short straddles, short strangles, or buying straddles, long straddle, or long strangles as well. If you want to see all positions, well, just hit clear all and then just click 1, 2, 3. Select bullish, select bearish, select neutral, and you've got all strategies available and you can compare the different ones. It's an easy tool to use, something that I forgot to mention in the previous discussion, but it's the search summary tool, easiest access. You find a stock you're interested in, you're bullish on it, you're bearish on it, neutral, bullish to bearish, bearish to neutral, enter it into the symbol lookup field, click on the search summary link, and then select which sentiment you're interested in. Now, of course, you may come across positions where it's strategy specific. In other words, hey, I like your suggestions for the bull put credit spread. I saw this position on the weekly bull put credit spread that had an 86% probability, a good 11% return, but maybe I want to go with a little bit lower probability, a little bit higher return, or a higher probability and lower return based on my expectations. All right, so we've got that covered for you as well. First, for the simple strategies, covered calls and naked puts. When you find a covered call position on a stock in our default searches or one of your own searches, you see a good return, good downside protection, but you're thinking maybe I want a little bit more downside protection and a little bit lower return. I'm willing to give that up. Or I want a higher return going a little bit deeper out of the money and have a lower downside protection. Well, the best place to go again go to that symbol lookup field, put in your position, or link to the option chain from the search. On the PowerOptions option chain, if you link to the call chain, you link to the put chain, you're going to see the important criteria that matters in the highlighted fields, yellow highlighted fields there, for that specific strategy. For a covered call, we're talking about the downside protection, percent if assigned, the maximum return if you're assigned, and of course, the probability above. For naked puts or naked calls, even if you want to go that route, you're going to see the percent to break even. Similar to the downside protection, how far the stock can fall before you're technically losing money on the position, the percent naked yield, the maximum return you'd make if the position did expire worthless, and of course, most importantly, as important I should say, the probability above as well. For spread trades, when you find a spread trade on the default search, you can use that Edit More Information button to link to the Search by Symbol tool. This will allow you to see other combinations on that particular stock. Here we see Celestica that came up on a default search. We click the More Information button, we go to Search by Symbol, and then we have a variety of different credit spreads on that same particular stock where we can compare the percent return, initial net credit, theoretical probability above, deltas, break-evens, and more. That's the default criteria columns that are selected. You can customize that at any time. So I find a bull put, bear call credit spread, bull call debit, bear put debit in the search. Click that Edit More Information button, go to Search by Symbol, compare other strikes after you've looked at the stock chart, company information, and you've got a good evaluation of where you think the stock's going to be. What best suits your trading goals? Higher return with lower probability and higher net credit, of course, or lower net credit, lower return, but with a higher probability of making that. Now, of course, anytime you go to a Search by Symbol under any strategy, remember up in the upper right-hand corner, you're going to be able to check the help video. You'll see more information on using that tool for evaluating it. Speaking of vertical spreads, credit spreads, debit spreads, iron condors and iron butterflies, a signature tool that we have available for you to use to compare different trades is the spread chain. When you're running a credit spread search, bull put credit, bear call credit, bull call debit, bear put debit, or even iron condor or iron butterfly, you can use the Edit More Information button to link to the midpoint spread chain. Or if you have a stock in mind directly, simply go to the Signature Tools tab and click on Spread Chain. This tool is very simple. It just allows you to view fast spread views, limited columns available, but that's okay. It's going to give you the important information. But simply enter in your stock symbol. You can compare credit spreads, debit spreads, put credit and call debit parity, or call credit and put debit parity, which are bearish positions. 5 quick criteria that you can use. You enter in your stock symbol, then you can enter in criteria. What spread width you want, minimum net credit, range in or out of the money, minimum percent return, and the probability range. You can isolate your desired spreads with these 5 criteria, whether you want to be at the money for, say, a longer term debit spread, bull call, or bear put, or you want to have a higher probability for shorter term, weekly, 2-week out credit spreads with a minimum return of 2, 3, 4, 5, 10%, 11%, whatever you need. Now, why these different 4 views? Why credit spread view, debit spread view, parity trade view, put credit versus call debit, and call credit versus put debit? All right. So the credit spread view allows you, or the debit spread view, allows you to compare just the credit spreads or debit spreads. Here on the left for CLS, we see the bear call credit spreads that have the 85% probability we want. We're showing the call spread premium. We're showing the range out of the money, and the percentage return. On the right-hand side, we're seeing the bull put credit spreads that have that same probability for our selected stock, 85% or higher, with the minimum return that we wanted, range out of the money. So this is a way you could quickly look at comparisons for iron condor positions. I want to take the 87% probability. Hey, I'm going to take the 4225, 4275 bear call, and I'm going to take the 265, 270 bull put credit spread for the November 21st expiration. You can click on the far left there to see which expiration date you want. Why credit and debit parity? Well, it's to compare parity trades on the fly. Remember, a bull put credit spread is a parity trade to the bear call credit. I'm sorry. The bull put credit spread is a parity trade to the bull call debit spread with the same strike prices, but you may see a variance in the potential percent return based on the spread width and the midpoint pricing. Again, here on the left, we are in the put credit and call debit parity view. The first trade that comes up, we looked at Apple here with a current price of $271.40. The 247.5, 252.5, 5-point spread, an in the money bull call debit with a probability of 86.6%, and on the right hand side, an out of the money bull put credit spread with a probability of 86.6%. At midpoint prices on this 5-point spread, the call spread debit is 425. Meaning that if the stock stays above 252.50 on November 21st, we get 5 points back. We'd make a 75-cent profit on our 425 debit or a 17.6% return with an 86.6% probability if we get filled at those midpoint prices. On the bull put credit spread, the net credit is only 38 cents. It's only a 8.2% return if we get filled at midpoint. Not quite double, but kind of close. Pretty much, I'm sorry, it is above double. But what we're looking at here is, hey, I'm not sure that I can get filled at the midpoint on this call debit spread on the left. But if I was interested in a bullish spread with about an 85, 86% probability for the November 21st expiration, I'm going to try to enter that bull call debit spread first. Try to get that debit of 425 for a maximum return of 75 cents. No guarantee it's going to be filled as it's deep in the money. But at the same time, if I get filled close to that, I'm going to get a much higher return than on the bull put credit spread. Great way to compare parity trades quickly. Not any guarantee that you're going to get the fill prices, but hey, I'm bullish. I want to do a vertical spread, as Sean mentioned. I don't want to do a covered call on Apple. I saw in the recommendations, I saw in the morning update price watch alerts email. Can I use it as a bullish credit or debit spread? Absolutely. Spread chain tool allows you to compare them side by side. Say, hey, I'm going to do a bull put credit spread to leverage money. That's great. Let's look at our probabilities. Let's look at our return. But now let's compare it instantly on the spread chain tool to the potential of the parity trade bull call debit. And if this is double, or if this is at least a 30% higher or a third return higher, I'm going to try for the debit spread first. And if I can get filled at that price, I'm going to take that parity trade. Same probability, same potential return, same strikes, same expirations. As I mentioned before, you're on that midpoint spread chain, whether you go to signature tools or you link to it from the search tool. Help video right up there in the upper right hand corner. Get more information on using the tools, using this, how to set up the criteria, and much, much more. All right, so in review, follow up for Sean's initial discussion that we had, comparing strategies on PowerOptions, the search summary tool. You find a position, you see a position in our morning update price watch alerts email for a covered call. You see something in a naked put, picks of the day, monthly or weekly. You want to compare against other leverage strategies. Simply type in the stock symbol into that lookup field, click on search summary, set bullish, set bearish, set neutral, compare your different strategies. If you are doing covered calls and cash secured puts, you see something come in the morning update, the price watch alerts, you see something in the weekly or monthly picks of the day that interests you, but you want a little bit more protection, you want a little bit more return by not using that strike and going, not as much in the money, a little bit further maybe out of the money, put the link to the option chain from the search, or go into PowerOptions in the symbol lookup field, put in your stock symbol and click on the chain. That allows you to compare the downside protection, percent return if assigned, and probability. Or for cash secured naked puts, you can see the percent to break even, similar to the downside protection, the percent naked yield, and the probability. You found a bull put credit spread, bear call credit spread that you like. Link to the spread chain tool from that edit more information button on the search to compare against different probabilities, different returns, different net credits, or just go to the signature tools tab, click on spread chain, put in your stock symbol, put in your base 5 or 4 criteria that you want for spread width, minimum percent return, range out of the money, a probability, and more, and just evaluate on the fly which one's best for you, or use the parity trade view of put credit and call debit parity, or call credit and put debit parity, to see which one might give you the best bang for your buck and go from there. So Sean, I hope that helps you out. Those are the tools that we would use to help better evaluate, better compare different positions as you mentioned. But search summary tool, hey, I found something in the covered calls, but I want to use a leverage trade, use a search summary tool. You're interested in bull put credits, you find something that looks good, but hey, what are the other comparisons of lower probability with higher return, lower return with higher probability, or parity trade? Can I get more bang for the buck? Use the spread chain tool. All right, so multiple ways to view and compare the different strategies on PowerOptions, different strategies in a section against a particular stock, and evaluate your best bang for the buck based on your goals, your expectations, and your risk-reward tolerance.